Alright, let me adjust my mic here. Ooh, 5 likes, 5 likes. Welcome guys, welcome. Hello, hello. Hi guys. Thank you for joining me on this lovely Tuesday night. Hopefully everyone can hear me. If so, please hit that like button down below or at least react in the chat room, the live chat room. And again, you guys can only speak, text, whatever you want to call it, or react in the live chat room if you are a subscriber to the channel. So make sure you guys hit that subscribe button as well. Alright, I see some hearts there. I think we are good to go. Let me just make sure I am still good on my end. Okay, awesome. Hey, what's up guys? Hello, hello, hello. Is there an echo? Joel, maybe try to refresh your page. Maybe exit then come back in. There is no echo on my side. Let's see. Hopefully there isn't an echo. There shouldn't be. I don't know why there would be. I think we're good. I think we're good. Yeah, no. I'm good on my end. Okay. Well. Welcome guys. Hello, 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 hello. Alright. Okay, so let's begin. So if you guys had not read the description box down below. Okay. So we have one question for tonight. Okay. So what is that question? Well, when will the Feds cut rates, right? Because we've been on this pausing period for quite some time now. And people, not just the Feds, are getting jittery, right? Where's my water here? Oh, there it is. And why are they being jittery? Well, first of all, as you all know, and you guys all, well, you guys should know by now, if you have been paying attention to the streams, and if you guys are part of the CFO Stream and Watch report, you guys should know that the overall trade war, tariffs, and geopolitical tensions have significantly risen for the past couple of months. And this is definitely putting pressure on Jerome Powell, hence my title, the Powell Pressure, right? Not just from a political perspective, but from the fact that there's real effects, real consequences, and real negative implications that are coming in from this current trade war and the tariffs, right? On the actual real economy, right? That is backed by objective, hard data. And so, you know, you can disagree, but you know, history will say that you're wrong, right? We know how the current economy works as well, and there's different actual models that we can make to understand where these tariffs are going to be affecting individual areas of the economy as well, very specific areas. So, you know, you can get down to the data and the numbers, and it doesn't look good, right? So, with all that in mind, you know, Jerome Powell and the Feds are definitely at a weird spot here, because this has kind of been a left jab or right hook, whatever you want to say it, right? From this current new administration, where they're kind of intervening with their own plan, the plan that they've had for the entire rate cut cycle all the way up into 2027, right, or most of 2026. So, you know, right now it's yet obviously cutting or raising interest rates is a delicate balancing act. Everyone should know that. Everyone should know that by now. And this is something that you guys should understand why it's a very delicate balancing act. If you guys don't know anything about monetary, financial, or fiscal policies, please read up on it. But my members and readers should know that. At this point, I've given you guys all the general foundational information that is important regarding that topic. But anyways, so, you know, with the fact that we're already seeing a very delicate kind of balancing act from the Fed to be very cautious in holding rates and pausing rates at these current highs, and obviously being very cautious with rate cuts, this kind of right hook from the current administration with these tariffs are causing a lot of trouble, and I've already predicted that way before in January too, right? And that if something comes out with the current administration having to disturb the current plans by the Federal Reserve, then things are going to become very not good, right? It's all jokes aside, right? This is very, very it's precarious in the current situation that we're in, and I know Jerome Powell is going to mention that tomorrow during the conference. So that's where I want to kind of hone in on for tonight, right? So definitely we're not going to get a rate cut. I mean, they're still trying to figure out whether or not the economy is going to contract for another quarter, right? And if that does happen, then technically we are in a recession, right? And by the way things are looking right now, especially with supply chains and just the overall imports and exports, where we're seeing a heavy amount of imports, a huge trade deficit, it's not looking good for the economy, especially as we head into the latter part of quarter two, the last half of quarter two, and also into quarter three as well, into the summer months. So I know the Federal Reserve is going to take account into that regarding their future plans for the next couple of FOMC meetings and rate decisions, and I'm really going to be looking for what Jerome Powell says regarding that plan, right? Because again, tomorrow the markets have already priced in that we're not going to be seeing any rate cuts tomorrow, and most likely for the next meeting as well in June. I believe it's June or July. Let me make sure I get my facts straight there. I'm pretty sure I'm right. Yeah, it's June. Yeah. So, there is literally, I think it's like a 97% probability that it's going to be another pause, right? And that's most likely going to be it. And depending on how things go, we're still going to see a pause in June, right? But then things change a little bit around July, as I believe, again, as I stated already a couple of minutes ago, that the economy could be facing some trouble, and actual trouble at that point, around July to August, September, around there, right? So into quarter three. And that's when the Federal Reserve is most likely going to get a lot more pressure than they're facing now to cut. So basically, the plans really haven't changed, right? I've told you guys this already before the year began, that this pausing period will continue, and we're most likely going to see another rate cut somewhere around quarter two or quarter three again, right? Just like in 2024, which again, 2024 I absolutely nailed that first rate cut, but the circumstances are, well, it's situational at this point, right? And it's very hard to try to predict where the Federal Reserve is going to continue back-to-back rate cuts, as they did in late 2024. But then again, we know that the Federal Reserve has to be very delicate with this balancing act with interest rates, and they can't just be cutting, right? And from a political standpoint, as we've seen from the current administration, that they really want these rate cuts to come in, right? But that's solely because they wanted, the Federal Reserve to be aligning with their own plans, right? But then again, the Federal Reserve is apolitical, right? Their actions are apolitical. They can speak on things where it can hint at being a little bit, not apolitical, or at least being political, but their actions are apolitical. They do things from a data-to-data basis, or data-by-data basis, excuse me. And so, to me, with the labor market still seeing favorable results, the data that just came out last week, right, for the month of April, for the month of March, if I'm not mistaken, with inflation just continuously going back down to the Federal Reserve's target of 2%, right? The PCE report that came out last week too, things are looking good. But at the same time, when we take a look at things in a much closer look, right? Because again, the devil's in the details. You should understand why we're seeing inflation plummet right? We're also seeing crude oil prices plummet too. And those are all indicative of the overall economy slowing down. And guess what? The economy did slow down, right, for quarter one. And so this is the main problem here, because if it continues to slow down, if you continue to see the economy contract from the amazing growth that we've seen since the bottom of 2022 for the overall markets as well, it's going to be trouble, a lot of trouble, right? And when we actually go into recession, if we do go into a recession into the last half of this year, or like I've been saying, early 2026, that's my own prediction, but most analysts and institutions are thinking that we're going to get into a recession by the middle of this year or by the end of this year. But I honestly think it's going to be next year, early next year, quarter one of next year. So we'll see how my prediction pans out compared to the analysts and institutions. But even disregarding the recession, right? The economy is in trouble, and the Federal Reserve has to do something to support the overall stock market from plummeting, and at the same time from the economy from, well, being in a deep recession due to the actions of this current administration, right? So again, it's kind of this right jab, this poke from the administration to the Federal Reserve. It's kind of what they're experiencing, right, to their plans, their current plans. And so tomorrow, again, I really need to hear Jerome Powell not beating around the bush and telling us exactly how it is, what they're thinking, and what the current data that they've seen so far for quarter one, for the entirety of quarter one, and including the most recent data points from the labor market data, right, labor market reports and inflation reports like CPI, PPI, and PCE reports. Even just ISM manufacturing or PMI data, right? Everything, right? I wanted to speak on all those facts and objective data and values and give us a clear path of least resistance for the Federal Reserve during this very, very delicate and uncertain environment. So, you know, how does this translate into the overall market's price action, right? So first of all, as you guys have been seeing, we've been seeing kind of the live action on the futures here on the S&P 500 mini futures. So first of all, a massive move up overnight due to the fact that the current administration has said that we're going to be seeing something spectacular, right? They're always using these extravagant words to really make the markets move here. But at this point, I think they're finally, at least the advisors and Trump himself is starting to look at the market, and they're trying to pump the market back up after blaming President Biden for this market, which again, from an objective perspective, doesn't make any sense, right? This crash was because of the fact that these tariffs and the current trade war has occurred, right? And obviously the U.S. really just going buck wild on on its own allies, right? And so the markets didn't like that. The markets have voted. I've said this multiple times, right? So, you know, with the fact the markets are now recovering, especially ironically after Trump said this was Biden's market, it's really interesting to see how they're trying to play this now, because they're starting to say that, oh, we have many deals, right? We have deals with 200 countries, which again, there aren't 200 countries in this world. By the way, if you guys didn't know that, right? So, especially from a trading perspective too. So, you know, it's very interesting to see what type of it's almost a euphemism that they're. I don't know if that's a correct way to describe it, but again, it's very extravagant and very pompous way of talking that they're doing now to try to uphold the markets here. Which again, we wouldn't mind that, of course, right? Since we've had a very, very rapid drop back down and a very quick market crash, right? So. You know, with this overnight action, I think tomorrow they're most likely going to be a sell news event, unfortunately. And we can probably see futures coming back down to at least retest maybe 5,550 or maximum 5,500 again, yet again, right? And you know what? That would be fine, right? Because that would mean that the price is coming back down to retest with the daily 21 SMA here. And, you know, it can provide enough time for the price to actually consolidate even more before it tries to retest with the daily 200 SMA. So if you translate that over to the actual S&P 500 here, ticker symbol SPY, it gets interesting, right? Because I told all of my members as well that I really want the markets to hold 550. I said this in the technical analysis video for the CFO Swing Watch report on Sunday night. So again, if you guys are interested in that report, please join us. If any of the readers are on here in the stream, if you guys want to leave a quick review for any of the non-members out there, please do in the chat room. But anyways, you guys can find the link to the report in the description box down below. You guys will find all the information on that. But again, if you guys are having some questions on the report or anything else, please DM me on Instagram at chartsfocus1. Again, on Instagram at chartsfocus1. Okay. So again, let's translate that quick analysis onto SPY, right? So overnight, I think SPY is trading around 562 to 563, so basically back to today's high of the day. Hey, welcome guys. Whoa, there's almost 20 people in here now. Welcome guys, welcome in. You guys kind of missed out a little bit on some important stuff that I talked about a couple minutes earlier, so please make sure to watch the replay. I really hope that I'm always hopefully that you guys are reminded from my constant reminders to watch the replay, right? And hopefully you guys do, since especially if you guys come in late, because I really want you guys to get this information for some overall market guidance, right, and navigation. So the S&P 500, I really want to see another retest of 550, but again, what has been the current price action for the last 2 days? Every single time we gap down, we defend it. And we had another gap down today and we defended it. How did we defend it, you might ask? Well, because you might be saying, wait a second, Andrew, right? We closed near the lows like we did today and yesterday. So how is this defending the gap down, right? Well, first of all, during the intraday price action, we completely filled in the gap down multiple times, twice, back to back. So that is bullish price action. And if you disagree with that, I don't know how to, I mean, that's basic technical analysis. There is clear evidence from these top wicks or these overhead shadows, right? The top shadows here, that there are bulls willing to continue to buy every dip, including consecutive gap downs. So if we do indeed see another gap down later on in this week, maybe on Thursday after the FOMC meeting, once the market decides to completely price in what Jerome Powell said during his conference tomorrow, we might get another gap down, and maybe, just maybe, by the end of this week, right? By the end of this week, we can see the price hitting 550, and we can have yet another very good dip buy opportunity for SPY. Now, there is a bunch of ticker that I've been looking at for 2027 leaps, including S&P 500 here, ticker symbol SPY, and there's a plethora of other names that have received a lot of option flow expiration date. And I'm gonna be giving all my private members in the CFO Discord chat room, and also my CFO Swing Watch report readers as well, a complete list and breakdown of the specific tickers that I want everyone to look at for the longer term, especially using option contracts that expire in 2027. And that is January 2027 as well. Okay, so again, if you guys want to check that out, if you guys want a list like that to prepare for your future investments all the way up into 2027, make sure you guys join the CFO Swing Watch report, where you guys will become a private CFO Discord member as well. You guys will gain automatic full access to the private CFO Discord. So again, all you have to do is become a member of the CFO Swing Watch report, and the link is down below in the description box. Does that make sense? All right, so with all that being said, okay, I just want to make sure you guys understand that thank you guys for the reactions there. Thank you guys, appreciate it. So whatever I say tonight, it can be completely negated by how the markets react tomorrow to what Jerome Powell is saying. And this is where things can get pretty tricky too, because we tend to get 2 to 3 initial reactions to the actual rate decision, and then what Jerome Powell is saying, and then his Q&A answers, right, with the reporters. So there's like 3 different segments of tomorrow, very important segments for tomorrow that will dictate how the markets move. And then after all of that, Thursday will also continue the price action that we've had, depending on how we close tomorrow, and that can dictate how we close by the end of this week as well. So please stay hedged or raise cash if you guys don't want to go through that pain of being too over leveraged to one side, either to the long side or to the short side. Okay, so personally, I'm gonna stay long. Okay, you guys can stay short if you guys are short right now, but again, I've given you guys my technical analysis reasons as to the reasons why I am thinking that we can continue to buy the dip here, and how this overall rhetoric that's coming out of the current administration now could be actually benefiting the markets, right? Even though their economic and fiscal policies are actually going to hurt the everyday American citizen and also the overall economy, right? As the economy contracts, as it did this quarter, the first quarter of this year. So again, those are facts, right? Those are not political standpoints that I'm trying to tell you guys. Those are actual facts, right? It's hard data. I've gotten some flack the past couple of weeks from people who are too emotionally invested into politics, especially for this administration, and it's kind of wild to see, because again, you shouldn't be completely mixing politics into this unless you're trying to use it as a type of analysis. If that works, then hey, that works for you. But this political emotions that I've been seeing coming out from my followers and from people in public that watch my videos it's astounding. Right? They're rejecting actual hard data and objective facts. All right, so it is what it is, right? If they're doing great in the market, but rejecting hard evidence, that's great. But it is what it is, right? And so right now, the markets are most likely going to be, again, still seeing some very good dip buys, and especially for gold, right? We've seen gold on a nice tear to the upside this week, and to me, this seems like a one final last leg up higher, and well, obviously this is a huge. Well, I don't think I'm gonna go over this anyways. I went over this with my members as well. This is the reason why we had that gold short as well, and it turned out pretty great, thanks to this nice price action back down. But obviously we're out now. Well, hopefully my members are out. I don't know why they wouldn't be out, but okay, I don't know why you didn't take advantage of this retest back to the daily 21 SMA. But anyways, this is a very large euphoric move in gold. And if gold decides to come back down, and we see the money rotate out of gold and other safe havens like gold and silver and other commodities, we should be seeing the overall equity markets seeing a broader inflow as people kind of realize that they can use their cash to get out of, well, first they have to get out of defensive positions and start to put cash back to work onto risk on equities, right? More riskier equities as well, right? So yeah, it's going to be interesting tomorrow. So please remember what I said tonight. The Federal Reserve is still at a very, very uncertain spot. Well, not still, because they were in a pretty nice spot up until last year, at the end of last year, but now for the last 2 to 3 months, their position has gotten shaky. That's a fact as well, and hopefully Jerome Powell can speak on that. At this point, they have to recognize that, and even based on the most recent speech that he had at I believe it was an economic forum? I don't quite remember. I barely watched that speech, but because I knew he was going to kind of speak on the similar things that he usually talks about. But he did mention that they are looking into and taking account of the economic risks and effects and negative implications that this current trade war and tariffs are having on the overall economy, labor market, inflation, and just overall the overall markets as well too, because you know they are looking at yields, the bond markets too. Okay, so you know, it's gonna be a pretty shaky rest of this quarter, in my opinion. We're probably going to be seeing a lot of sideways action, most likely. I mean, we're kind of stuck back into this range here. I've talked about this range multiple times already in the past couple of weeks. This 549.50, or if you want to round up, 550 to 574.50, or if you want to round up as well to 575. Okay, so again, just round up 550 to 575. This is a very, very complicated range here, especially from with the buyers and sellers constantly battling out here between these two levels, very significant levels at that. And so far we've kind of hit this midline, not really midline, but midline resistance level, excuse me, at 565. So you know, just be careful, guys. If you guys are leveraged to, you know, to one side, please raise cash, or at least try to balance that out heading into tomorrow. You do not want to be caught with your pants down, literally. Hey Joe, you said newsletters are a really good read. You guys should check it out and give it a chance. Yes, I've been a reader for almost 4 years. Yes, that's just facts. That is very true. All right, so if you guys are really interested in becoming a reader, please look in the description box down below. You guys can, and I know you guys know how to use YouTube and links, so I'm not gonna really explain to you guys where to find them. So if you guys have any questions though regarding the report, how to join, or if you guys have any questions on the report itself and how you guys can gain simultaneous and automatic access to the private CFO Discord, please DM me on Instagram at ChartsFocus1. All right. Okay, so that is it for tonight, guys. I mean, I really don't have much to say other than that last piece of advice that I gave you guys all. Just to really just protect yourselves, right? You do not want to be caught with your pants hanging down. Okay, and futures are looking great right now. That's awesome. Gold futures are down as well, which is good. But overall, please be careful. I'm going to continue to monitor futures for the rest of the night and posting some charts in the private CFO Discord, and also that entire list of the long-term names that I'll be looking at, especially in the 2027 expiration dates. So huge long-term leaps on specific tickers that have gotten such flow over the last month. Okay, and if you guys want that list, that curated list where I personally pick and choose which tickers will be good to have for the longer term all the way up into 2027 using option contracts as a leveraged position, make sure you guys join the CFO Swing and Watch report, because you guys will gain access to the private CFO Discord where I will be posting that entire list. All right. Okay. So have a great rest of your night and good luck tomorrow. Thank you guys so much for watching.